Did you know that as a bank customer in Nigeria, you are legally entitled to earn interest on your money, not just in savings and fixed deposit accounts, but even on some current and domiciliary accounts and deposits held as collateral? Did you also know that you can actually negotiate the interest rate your bank pays you instead of accepting whatever rate they decide to give you?
Most people don't know this. Many Nigerians think their money can only work for them if they invest in shares, bonds, or crypto. That is not completely true. One of the reasons we keep money in the bank, apart from safekeeping, is to earn returns by way of interest. So today, I'll explain your rights as a bank customer and how to make your money work for you legally. Your bank may not always volunteer this information, which is why you need to know your rights.
Everything I'll be discussing here is based on official regulations issued by the Central Bank of Nigeria, CBN. We'll be looking at two important guidelines. The first is the CBN Guide to Charges by Banks, Other Financial and Non-Bank Institutions. This guide was first released in 2004 and has been updated several times. The current version is the 2020 edition. This guide regulates what banks can charge customers and also what they must pay customers as interest on deposits. Let us now look at Section 1 of Part 2 of the CBN Guide to Charges. This section talks about interest on deposits by commercial banks. First, current accounts. For current accounts with credit balance, the interest rate payable is negotiable. This means that if you operate a current account, whether as an individual or a company, you can approach your bank to negotiate a better interest rate. However, your bargaining power depends largely on the amount in your account. The higher your credit balance, the higher your chances of negotiating a favorable rate. Second, savings accounts. For savings accounts, customers are entitled to a minimum of 30% of the monetary policy rate, MPR, per annum, provided you do not make more than 4 withdrawals in a month. If you make more than 4 withdrawals in a month, you will not be entitled to interest for that period. So yes, withdrawals affect your interest. Third, term deposit and domiciliary accounts. Just like current accounts, interest rates for term deposit and domiciliary accounts are not fixed by law. They are negotiable between you and your bank. Fourth, deposits held as collateral. This part surprises many people. If you deposited money with a bank as collateral for a loan, whether in Naira or foreign currency, that deposit still attracts interest. The interest rate is what you and the bank agree on, so even as collateral it is still your money and should earn returns. Please note that for all accounts except savings accounts, interest rates are not entirely fixed by the bank. Under CBN guidelines, you have the right to negotiate a better interest rate than what your bank initially